Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, February 12th, 2021. And here are our top stories, lessons from the GameStop frenzy, and how likely is student debt cancellation. Well, joining me now to discuss this and a lot more, Jennifer Barrett is the Chief Education Officer with Acorns. Jennifer, great to see you, and thanks for joining us on the program this morning.
Oh, great to see you too. Thanks for having me.
Absolutely. So immediately when I thought of GameStop, I thought I needed to talk to Jennifer Barrett. And not because people on the Acorns platform are day trading, not that at all. But I wanted to get your perspective because I know Acorns, long track record, long time period in terms of saving and investing. But give us your perspective. What are users on the platform thinking?
Yeah, and I think I will say I think it's been a positive in a lot of ways because all the attention around this story has driven a lot of interest in investing in the stock market generally, and that is a positive thing as long as you're doing it in an informed way. And I think Acorns and a lot of investing apps have really benefited from that. So we saw a surge in signups in January. It was our best month ever. So we're fast approaching 9 million users. Obviously, people who are signing up for Acorns, they're not day traders. We don't have single stock trading. When you invest with Acorns, you are put into a portfolio with exposure to thousands of stocks and bonds. So we are, I wouldn't say we're the anti-Robinhood, but I think that people who were signing up for Acorns were not necessarily looking for a Robinhood-like experience. I think they just wanted to get off the sidelines and start investing, and that is definitely a positive. Obviously, there are other lessons to learn from the whole GameStop story as well, and we can talk about that too. But I think one positive thing is that it really garnered a lot of interest from people who may have been a little hesitant to put money in the stock market to kind of take the leap and get off the sidelines.
Yeah, and I don't know who the anti-Robinhood is. Is that Richard III? Because he was the bad guy in the story, not Robinhood. Robinhood isn't the bad guy in the story.
I know.
But Jennifer, I mean, I read your columns and I read what Acorns produces on a regular basis. It's all about portfolio allocation, diversification, and a long, protracted track record to get you where you need to be. When I saw this GameStop thing kind of unfold, I'm like, oh, this is not going to end well for the people who really don't need it to end, who are going to be hurt the most.
Yeah, I totally agree. And I think that that's the other part of this story too, is that there are so many risks in trying to time the market. And particularly in a case like this, where the rise in the stock value wasn't really based on fundamentals. It was like kind of a frenzy, a FOMO frenzy, if you will, around, that was generated by this Reddit group. And so what you see, it's almost similar to Bitcoin. It's like once the price starts going up, everyone starts piling in. They don't necessarily know much about the stock. They just don't want to miss out on those gains. And they're seeing other people making huge amounts of money. And so I think some people did make a lot of money. If you look at where GameStop was like a month ago, I think it was about $20 a share. And at its height in intraday trading, it was over $450 a share, which is just mulling. So some people made money if they sold around there, but other people came in at more than $200, $300, $400 a share. And now the stock is sitting right around $50. And frankly, if you're looking at the fundamentals, there's not a lot of optimism that the stock is going to go back up to those levels anytime soon. So you have a lot of people who bet on it near the high, and now they're left holding the bag, and they're facing some real losses. And so I think, this is a way into a really important lesson, which is, and we promote this as our approach to investing, and I do on a personal level too, is take like the bulk of the money that you're investing and put it into broad-based indexes, put it into a diversified portfolio. We say this at Acorns. We say put a lot of your money into portfolios like those we offer at Acorns because you can set it and forget it, and it grows slowly, steadily. There may be some bumps, but overall you would expect it to grow significantly over time. So it's there when you need it, and you really don't have to think about it. And then take like 10% of the money that you've set aside for investing. And with that money, you can play around a little bit. I mean, you can bet on Bitcoin or Dogecoin if you want. You can bet on GameStop. This week it's pot stocks. If you want to trade, if you want to day trade, if you want to take some risks, do that, but don't do it with money that you are definitely going to need. Make sure that you have a lot of money set aside in portfolios that are more broad-based and have more diversification. so you don't get stuck in a situation where you're down and you might need access to that money and now you're in a really tough spot.
Yeah, Jennifer, when I saw this, it reminded me of the tech bubble.
Yes.
And I'm old enough to remember the tech bubble where
Me too.
there was a lot of appreciation and people got in at the last minute, or even like a real estate bubble where people get in at the last minute. And I think that there's, as you said, there's a lot of educational opportunities here, and obviously you're the chief educational officer of Acorns. But if you're a parent and you're trying to teach your children about financial literacy and get them acclimated to what it means to actually invest $1 or a Bitcoin or some other type of currency, right? Yeah. This is a real learning opportunity for those parents out there, and even those college students out there who are saying, okay, I want to be able to invest in the stock market, but I also want to be able to save for my future.
Yeah, I think so. And it's funny you should mention that, because my 14-year-old son actually came in late January holding his phone and said, yeah, you know a lot about stocks, right, Mom? I was like, yeah, I like to think so. And he said, can you explain this whole GameStop thing? It's all over TikTok. So I actually thought that was a great opportunity to sit down with him. And I did explain to it, in as accessible a way as I could, what a short squeeze means and options, and kind of explained how that frenzy happened and why we were seeing such volatility with the stock price. But I also reminded him, I said, listen, this is not normal. This is not normal that you put some money in a stock and it rises to these soaring levels, and then you sell and you have now paid off your student loans, as some people in the Reddit group talked about. That's the exception. And you can take a little money and play with those stocks. But really, the stock market is an opportunity to put money away steadily, let it grow over time, and make sure that you're just investing regularly and you're investing in a lot of different stocks. And he and I have talked a lot about it, but I think, to your point, the fact that there was so much attention around this and that it was on TikTok, I mean, it was reaching audiences who aren't even old enough to invest yet, and some that are old enough and just haven't invested. And so it is a really good opportunity to actually sit down and explain, like, here's what happened here. And here's how to think about it in the broader scope of how to invest for your future, which is take a little sliver of your portfolio, and you can take risks like this. But really, most of your money, again, as boring as it sounds, should be in a portfolio that is very diversified so that you don't have to worry. Because can you imagine you wake up the day that GameStop stock dropped as much as it did, and the feeling you would have in your stomach, and just to think how much you just lost in 24 hours, you don't want to be caught in that situation too. So it is kind of a perfect opportunity to teach some important lessons around investing, I think.
Yeah, I agree with you. And I've heard people liken this to, playing the stock market like gambling. It's not designed to be like that. It's not like playing a roulette table or a slot machine in Vegas. Very different principles involved. And to your point, it's about that long term. Get yourself in a better position, get the appreciation of the market, and that is best served over time, as you said, with indexes and the like. Well, Jennifer, I want to take a quick break. We're going to shift gears and talk to Jennifer when we come back about the possibility, how likely is student loan debt forgiveness. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate co-pays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. We're talking to Jennifer Barrett. She's Chief Education Officer for Acorns. Jennifer, thanks as always for staying with us for our second segment this morning.
Well, thanks for having me.
I'm surprised with my line of question. Surprised with my line of questioning. You didn't just walk off set. But let's talk about this very important topic. You and I and others on this network and elsewhere on Acorns and other places talked about the growth of student loan debt that many Americans have, and not just young people, more mature people also have it. But yes, there's some talk out of the White House and also Congress, I believe, on some level of student loan debt forgiveness. How likely is this to really happen in 2021?
Yeah, I think this is the question on a lot of people's minds. There's certainly 45 million Americans who hold student loan debt right now are wondering this. And there's a huge amount of momentum behind it. You've got a lot of people speaking out now in favor of student debt cancellation or forgiveness, whatever term you want to use. And I do think the likelihood certainly is much higher than it has been in recent history. And I feel pretty optimistic that some action will be taken this year to provide relief beyond the pause that Biden put in place, or the extension of the pause that Biden put in place on federal student loan payments, and the extension of that zero interest on federal student loans. So yes, I think it's possible, and probably more likely now than perhaps ever in recent history, at least.
Yeah, and look, I think this is there's $1.6 trillion, I think, is the number that I saw, and that was as of last year, so it's only probably gone up. But all those people who had federal loans that aren't paying, they're going to have to make payments on their loans. And maybe they put that aside because of the federal mandate that both President Bush, President Trump, and President Biden put in place. But this is not a problem that's going to go away overnight, right? And so there has to be a plan in place to either pay off the debt or forgive some of it, or somewhere in the middle.
Yeah, I agree. And I think the fact that one of the first actions that President Biden took upon entering office was to extend the pause on federal student loan payments says a lot about how important this issue is to his administration. Now, I think the question at this point, really, it's not a matter of if, I think, anymore in terms of providing more widespread relief to federal loan borrowers, but when and for how much and who exactly qualifies. And Biden has been pretty steadfast in insisting that this be something that Congress push through, even though I know there's a lot of talk right now that he could use executive action to cancel student loan debt. But I think he's been pretty wary of doing that and has indicated time and time again that he really wants Congress to take the lead here. And so right now, obviously, we're all eyes are on the $1.9 trillion stimulus package, which does not include anything on student loan debt relief. But I think once we're past that this is going to be one of the next big topics that Congress is going to focus on. So you've got Chuck Schumer, who's the Senate Majority Leader now, who's really pushing for $50,000 in student loan debt cancellation. Obviously I'm an outsider looking in here, but I think that that's probably not likely. I was talking to Mark Kantrowitz, who runs Saving for College, and I'm just looking at the numbers here. He estimated that if we forgive $10,000 in federal student loan debt, which is what President Biden has continued to push for, that would cost the country about $377 billion. Forgiving $50,000 in debt for all borrowers would cost more than $1 trillion. So I have a hard time seeing how that would get enough support in Congress to gain real traction. I wonder if it's more like a starting point in some ways, and that we're betting high there and we'll end up somewhere in the middle. But I do think something like, $10,000 in student loan debt cancellation for federal loan student borrowers, and maybe there'll be more criteria around that too in terms of income levels. I think that's pretty realistic, and I do think that there is a growing amount of support for that. So that, I don't want to raise expectations unnecessarily, since there's still a lot of debate to be had, and I don't think there's 100% support behind that, obviously, but I do feel like there's really strong momentum behind this right now, particularly among Democrats, and they are the majority in Congress right now. So it bodes well for additional relief for student loan borrowers.
And what about the cost of college? I mean, is this kind of the symptom, or maybe I'm not using the right nomenclature or metaphor, but the cost of college has certainly gone up since I went.
Yes, me too.
And that was a long time ago. But it's gone up considerably. Kids want to go to a great school. If they want to go to college, not everyone goes to college. You don't have to. But if they do go to college, they want to go to a good school. They want to be able to network and have a good alumni and be able to get a good job after college. But is there any talk, at least, of taking a look at some of these costs of some of these colleges? Because it's a lot of money.
It is. I'm feeling this myself. We've got two kids, one who just started high school and one who's still in elementary school. So I think about this a lot because we're trying to set aside enough money to cover this ourselves. I do think that there is more pressure on lawmakers to put more pressure on universities. It's an interesting time, though, because what I worry might happen is that you're going to see these very elite universities continue to attract huge numbers of applicants. If you look at the numbers this year, the number of applicants for schools like Harvard and some of these top tier universities has only gone up. And their tuition is really out of reach for a lot of people. And I think they offer more opportunities for student aid than they may have in the past. But they're just seeing such a surge in demand that there's really not a lot of incentive to make it more affordable for people, if they're continuing to see that demand. And then in the middle, I think you're seeing a lot of colleges that are really struggling. And the fear is that those colleges may not stick around. And so that will be less of an option for people. And then you've got community colleges and a lot of state universities. Obviously, state universities run the gamut in terms of how people see them as elite or not. You've got some fantastic state universities out there, and I do think that there is more momentum again from the legislative side to offer some more relief for people who want to go to state university to, especially we've got proposals in New York. We've got a lot of proposals on the state level to make it more affordable to go to state college, to make it more affordable to go to community college. So I think you're likely to see a little more momentum on that end. I don't know, on the elite university front, I think it's tough. I think it's really tough right now because you're just seeing so much demand for these universities. It's getting harder and harder to get in. They have more demand than they can deal with. There's just less incentive, I think, for them to really think about cutting their costs. And what you do see is that they offer more student aid, and they've expanded that a little bit, which helps. But that's not the same. Yeah. Yeah,
I think it's going to be interesting. And I think you bring up a great point about some of those middle tier, I don't know how else to describe the middle tier schools that could either be acquired through M&As. We talked about that with Rick Seltzer recently from Inside Higher Ed. There's some acquisitions. So it's going to be interesting to watch. I think the next year, we're only in February 12th. So we'll have to see how it all unfolds. Jennifer Barrett, it's always a pleasure chatting with you. Great pieces again. And we look forward to having you back on the program again very soon.
Thanks so much.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to? then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our newsletter, The Morning Pulse. Don't forget, we're back again tomorrow for BRN Weekly. We'll have a very special guest, and we'll take a look at some of our best segments for the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.